A bricklayer bought racehorses that competed on live television and won $1 million purse. His stable became one of the most recognized names in American quarter horse racing. Federal agents discovered he was washing millions for the Zetas cartel, one of the most violent criminal organizations in Mexico. The money moved through stables, auctions, and breeding farms across Oklahoma. None of it looked like crime. That was the point. Drug cartels generate billions in cash from narcotics sold on American streets. Moving that money without detection requires systems more complex than any legitimate business. The machine operates through banks that fail to ask questions, underground networks that move value across continents without physical transfer, and legitimate industries that serve as fronts. Law enforcement calls it the most difficult part of the drug trade to disrupt. Cartels call it survival. The challenge is simple in concept but difficult in execution. A cartel operating in the United States collects payment in cash. That cash can't be deposited directly into a bank account without triggering alerts. It can't be carried across borders in sufficient volume. It must be transformed into assets that appear clean, transferred to locations where it can be spent, and documented in ways that withstand scrutiny. The penalty for failure is forfeiture. The reward for success is operational continuity. Traditional methods relied on human couriers and physical transport. Modern systems depend on partnerships with financial institutions and shadow banking networks that span the globe. The scale has grown beyond what most enforcement agencies anticipated. Between 2020 and 2024, suspicious activity reports linked to Chinese money laundering organizations alone reached $312 billion. The machine doesn't stop. It adapts. One adaptation involves an ancient Chinese system called flying money, dating back to the Tang dynasty. The original purpose was to allow merchants to move value across provinces without carrying physical currency. Modern cartels repurposed it. A buyer in China needs US dollars but can't legally send more than $50,000 out of the country per year. The cartel has millions in drug cash inside the United States that it can't move. The buyer deposits renminbi into a Chinese bank account controlled by an underground broker. In exchange, the network facilitates the delivery of physical US dollars inside America. No money crosses a border. No wire transfer creates a record. Both parties get what they need. The system works because demand is constant. Chinese citizens and businesses require dollars for overseas purchases, tuition payments, real estate investments, and capital flight. Capital controls create the restriction. Underground networks exploit the gap. Cartels provide the supply. The fee charged by these networks runs under 5%, compared to up to 20% charged by traditional illicit brokers. Speed and cost make it the preferred option. In January 2021, Edgar Joel Martinez Reyes traveled to Mexico to meet with Pei Tong, a representative of a Chinese underground banking network. U.S. agents photographed the two men together in a car at the San Ysidro border crossing. That photograph became evidence in Operation Fortune Runner, a federal investigation that resulted in charges against 24 people in Los Angeles. Prosecutors allege the network laundered $50 million in fentanyl and cocaine proceeds. Martinez Reyes was indicted as a lead defendant in the federal conspiracy case. The partnership between Mexican cartels and Chinese money laundering groups had been formalized and documented. If you're starting to see how these systems connect, take a moment to subscribe. The architecture of illegal finance operates in every major city, and understanding it changes how you read the news. A separate method involves trade goods and peso brokers. The black market peso exchange operates throughout Latin America. The process begins when a cartel sells drugs in the United States and collects cash. Instead of moving that cash back to Mexico, the cartel sells it at a discount to a peso broker. The broker uses the cash to purchase consumer goods like electronics, clothing, and appliances in the United States. Those goods are exported to Mexico or other Latin American countries and sold. The proceeds are converted to pesos and delivered to the cartel. The cartel receives clean currency in its home country. The broker profits from the exchange rate differential. The system depends on legitimate businesses that either participate knowingly or remain deliberately ignorant. Retailers accept large cash purchases. Freight companies transport the goods. Importers in Mexico distribute the products. Each link in the chain can claim plausible deniability. Enforcement agencies focus on identifying businesses with transaction patterns that deviate from industry norms. A clothing wholesaler that suddenly accepts $200,000 in cash for a single order draws attention. A freight company that ships electronics to the same distributor in Tijuana every week triggers review. In May 2025, attorney Hector Alejandro Paez Garcia pleaded guilty to operating a $52 million money laundering network for the Sinaloa cartel. He used a series of fake companies registered in San Diego to process cartel funds. The companies appeared legitimate on paper. They filed tax returns. They maintained bank accounts. They conducted transactions that mimicked normal business activity. Federal investigators unraveled the network by tracing payment flows and identifying the absence of genuine commercial operations. The companies had no employees, no inventory, and no customers outside the cartel structure. They existed solely to create the appearance of legitimacy. Banks are the access point. Without financial institutions willing to accept deposits and process transactions, the machine can't function at scale. Some banks participate through negligence, others through calculated indifference. The distinction matters for prosecution, but not for the outcome. Money moves regardless. TD Bank became the 10th largest bank in the United States to plead guilty to money laundering conspiracy. On October 10, 2024, the bank was ordered to pay $3.09 billion in penalties. Federal prosecutors presented evidence that between January 2018 and April 2024, the bank failed to monitor 92% of its transaction volume. Trillions of dollars moved through accounts with no oversight. Internal messages revealed employees knew the bank attracted criminal clients. One employee asked a colleague in a work chat why so many bad people banked there. The colleague responded, "Because we are convenient." That message was entered as evidence in federal court. One launderer, De Si, deposited bags of drug cash at TD Bank branches, sometimes reaching $1 million in a single day. He gave bank employees over $57,000 in store gift cards to bypass security alerts. The system worked because employees accepted the bribes and the bank didn't enforce its own policies. When regulators reviewed the accounts, they found transactions structured to avoid reporting thresholds, deposits from known criminal sources, and patterns consistent with trade-based laundering. TD Bank paid the largest penalty in history for a bank under the Bank Secrecy Act. If this is landing for you, hit the like button. It pushes this breakdown to people who need to understand how financial systems fail at scale. HSBC admitted similar failures years earlier. In December 2012, the bank acknowledged laundering $881 million in drug proceeds through its U.S. branches. Mexican and Colombian cartels used the bank to move funds with minimal scrutiny. The bank paid penalties and agreed to reforms. No senior executives faced criminal charges. The settlement included a deferred prosecution agreement that allowed the bank to continue operations. Critics argued the penalty was insufficient. The bank's annual revenue exceeded the fine within months. The absence of individual accountability creates a structural problem. Banks calculate the cost of compliance versus the cost of penalties. When penalties are lower than the profit generated by high-risk accounts, the incentive structure favors risk. Enforcement agencies can fine institutions but face difficulty prosecuting individuals. Corporate structures diffuse responsibility. Executives claim ignorance. Middle managers follow directives. Frontline employees process transactions. The system protects decision-makers while punishing the institution in ways that shareholders absorb. Some operations bypass banks entirely by embedding within legitimate industries. Jose Trevino Morales, brother of two Zetas cartel leaders, operated a horse breeding and racing operation in Oklahoma between 2008 and 2012. Over a 30-month period, the operation spent $16 million on expenses related to breeding, training, and racing quarter horses. The horses competed at major tracks. One horse won large purses. The operation appeared to be a successful family business. Federal investigators identified the source of the funds as cartel proceeds. Trevino Morales was convicted and sentenced to 20 years in federal prison. The horses were seized and sold at auction. The method works because the industry accepts cash and values discretion. Horse racing has historically operated with minimal financial oversight. Buyers and sellers transact privately. Auctions accept payments in forms that don't require detailed reporting. Breeding farms generate revenue through stud fees and sales that are difficult to verify. A cartel can inject millions into the industry, participate in legitimate competitions, and extract clean money through winnings and sales. The operation requires patience and knowledge of the industry, but it produces results that withstand initial scrutiny. Another employee of a Sinaloa cartel laundering network stole money from a cartel account in February 2021. The cartel demanded repayment. Under threat of death, the employee stole another $30,000 and bought a tortilla machine, planning to resell it for a profit to repay the debt before the cartel found him. The FBI intervened before the cartel could act. The story illustrates the personal risk embedded in the system. Participants operate under constant threat. Mistakes aren't tolerated. Exit isn't an option. The machine extends beyond North America. In June 2026, Italian police dismantled an underground bank in Prato, Italy, run by a Chinese national. The network washed up to 100 million euros per year for drug trafficking organizations using the flying money system. The investigation revealed connections to local mafias and international cartels. The network operated openly within the Chinese community in Peso, processing transactions for clients across Europe. The operation functioned for years before law enforcement identified it. The dismantling required coordination between Italian authorities, Europol, and financial intelligence units in multiple countries. A U.S. House Financial Services hearing in June 2026 revealed that Chinese money laundering organizations have become the dominant player in moving drug cash. Testimony indicated these networks processed over $312 billion in suspicious activity between 2020 and 2024. The networks operate with efficiency that traditional peso brokers can't match. They charge lower fees, move money faster, and offer services that span continents. The shift represents a fundamental change in how cartels manage their finances. The old model relied on regional brokers with established relationships. The new model uses digital communication, encrypted messaging, and decentralized networks that are harder to infiltrate. In January 2026, the U.S. Department of Justice charged a California-based defendant for laundering tens of millions of drug dollars by exporting electronics to Asia and using mirror payments to Mexico. The method combined trade-based laundering with underground banking. The defendant purchased electronics in the United States with cartel cash, exported them to distributors in Asia, and arranged for payments to be made to the cartel in Mexico through a separate channel. The physical goods moved in one direction. The financial settlement occurred through a parallel system. The two streams never intersected in a way that created obvious connections. The systems persist because they solve real problems for multiple parties. Cartels need to move money. Chinese citizens need access to dollars. Businesses need customers. Banks need deposits. Each participant benefits from the arrangement. Enforcement disrupts individual networks but can't eliminate the underlying demand. When one network is dismantled, another emerges. The structure adapts to enforcement tactics. Investigators develop new techniques. The cycle continues. The cost is measured in communities destroyed by drug addiction, violence generated by cartel operations, and financial systems that lose credibility. The $3 billion penalty against TD Bank was the largest in history under the Bank Secrecy Act. It didn't prevent other institutions from taking similar risks. The deferred prosecution agreement with HSBC didn't stop cartels from finding new banking partners. The conviction of Trevino Morales didn't end money laundering through the horse racing industry. Each case creates temporary disruption. The machine rebuilds. The machine operates because it must. Cartels can't function without financial infrastructure. The billions generated from drug sales are worthless if they can't be moved, converted, and spent. Every dollar that reaches its destination represents a successful transaction within a system designed to evade the most sophisticated law enforcement agencies in the world. The bricklayer who bought racehorses understood that. The individuals who ran fake companies in San Diego understood that. The bank employees who accepted gift cards to ignore red flags understood that. They participated because the system rewards participation and punishes refusal. If any of this stayed with you, like and subscribe. The architecture of illegal finance is more visible than most people think, once you know what patterns to look for.